Disclaimer. This video is for entertainment and educational purposes. It is not a suggestion to buy, sell, or hold any asset. Please do your own research and due diligence when choosing what to invest in. Now, on to the analysis.
Hello everyone, welcome to the channel Dad's Market Stats. In today's video, we're going to be going over the options that we have on our watch list. If you know that I've been putting out some short videos to let you know which options you could sell if you wanted to make some passive income. And as we can see here on the options watch list, we have currently Tesla, AMD, and Nvidia options here. So if you were able to sell these options, we're going to take a look at how those options are doing today. So let's go ahead and go into that right now. So first of all, for these Tesla options, as you can see here, the expiration date is November 15th. We agreed to buy shares of Tesla for $215, okay? But we received $19.48 for this contract. So that makes the break-even price $195.55 per share, okay, for this contract. The current Tesla price is $220.89 per share. So as of this moment, it doesn't appear that we're going to be able to buy 100 shares of Tesla at the price that we agreed to pay for them, right? Which is $215. But let's take a look at the simulated returns. So we can see right here that this contract has already lost some value, and as a result, we're already up on this contract, up $78 on this contract. But by the time this option expires on November 15th, since we're not going to be able to buy 100 shares of Tesla for $215, we're going to receive as compensation, we're going to receive $1,948, as you can see right here from the simulated returns. Okay, so that is how this option is doing right here. Let's take a look at the next option on our watch list, which is AMD. Now, if you don't know about AMD, all right, this company, they also are a chip manufacturer, just like Nvidia is. Okay, so Nvidia, they're into a lot of things right now. They're into gaming systems. They're into autonomous vehicles. They make chips for all of these industries, right? The medical industry, they're even in the Bitcoin mining industry, okay? Because they make a lot of the chips that are used for those machines, right? Those mining machines that these companies use, right? These Bitcoin mining companies use. So AMD is also going to benefit from any momentum that goes into Nvidia shares, Nvidia stock, okay? Because they are a similar company. So as we know, the saying goes, a rising tide raises all boats. So AMD will certainly benefit from any momentum that goes into the chip making industry. Okay. So for this option, if you were able to sell this option, you agreed to pay $150 per share for AMD. Now, currently, as we can see here, the option expires on November 15th. We received $10.18 for this option. So the break-even price would be $139.85. Okay, now the current AMD price is $154.71. Okay, so this contract loss value, as we can see here, the total return is negative $95. And the reason why it lost value is because when we put this option on our watch list, shares of AMD were trading for a higher price. Okay, so that's the only reason why it's down, and we're down on our total return here. Okay, this option went up in value. Okay, as we can see. So now another thing that I did want to point out, if you were able to sell this option, you did need to have the collateral of $13,985. Okay, which if you sold it, that means you had that money as collateral. So when this option expires, if we're not able to buy shares of AMD for the money that we put as collateral, right? Because right now we see AMD is trading at $154 per share, and we only agreed to pay $150 per share of AMD. So when this option expires, we're not going to be able to buy 100 shares of AMD. We're going to receive our collateral back, and as compensation, we're also going to be receiving $1,018. Okay, so that is what's going to happen when this option expires. We're not going to get 100 shares of AMD, but we are going to receive $1,018 for our troubles, plus all of the money that we put down for collateral. Okay, so So that's not all bad news. Okay. Now let's take a look at the next option here that we have, which is Nvidia. Now, Nvidia, ladies and gentlemen, if you don't know, they're part of the Magnificent Seven. They are Magnificent Seven, which means that they are one of the most valuable companies in the stock market right now. They are valued at over $2 trillion. Okay. So as we can see here, the reason why their shares are trading lower than AMD, right? As you can see, they're trading at $129 a share, is because they recently did a stock split. Okay, so they have more outstanding shares in the market, and that is why their shares are worth $129 per share. They are still a $2 trillion company, right? Getting close to 3 trillion, I believe. Okay, so as of right now, this option that we agreed to pay $121 a share for Nvidia, okay? But when we sold this option, we received $11.95 per share. So that means that the break-even price is $109.05. Currently, Nvidia's price is $129.46. Okay, so since we only agreed to pay $121 per share for this company stock here, that means that when this option expires on November 15th, right now, we're not going to be able to buy 100 shares of Nvidia. So what's going to happen when this option expires? Well, we're going to receive all the money that we put on collateral. We're going to receive that back. Okay. It's going to get freed up. And as compensation, because we weren't able to buy the 100 shares of Nvidia, we're going to receive $1,195 as compensation as well when this option expires. But ladies and gentlemen, this option expires on November 15th, so it's still a long way to go before this option expires. Nvidia shares are very volatile, so they can easily come back down to $121 a share. Okay, but it also could go further up to $150 per share. So then that means that we wouldn't be able to buy the 100 shares of Nvidia for the price that we agreed to buy them for, which is $121, but we'll receive this amount as compensation, right? $1,195. Okay, ladies and gentlemen. So I hope this is making sense to you. If not, please let me know in the comments below if you have any more questions regarding those options. But now let's go into the meat of the video today. Okay, we're going to talk about Bitfarms' acquisition of Stronghold Digital Mining Company. Now, why was Stronghold looking to be bought out? See, Stronghold, unlike Bitfarms, was looking to have a buyer of their company, right? Because as we can see here from their latest earnings report, let's take a look at their liquidity, right? It says here, as of June 30th, 2024 and August 9th, 2024, the company had approximately 5.1 million and 3.6 million, respectively, of cash, cash equivalents, and Bitcoin on its balance sheet, which included approximately 4 Bitcoin and 2 Bitcoin, respectively. As of June 30th, 2024, the company had principal amount of outstanding indebtedness of approximately $55.1 million. As we can see here, ladies and gentlemen, this company, Stronghold Digital Mining, was in trouble. Okay, they had $55 million of debt and only 5 million of cash and cash equivalent. So that is why this company was looking to get bought out. So in comes Bitfarms, right? Let's take a look at Bitfarms' liquidity as of their latest earnings report. As we can see here, it says, as of June 30th, 2024, the company had a total liquidity of 195 million, comprised of 139 million in cash and 905 Bitcoin valued at 57 million, based on a Bitcoin price of 62,700. As of July 31st, 2024, the company held 1,016 Bitcoin on their balance sheet. As we can see here, ladies and gentlemen, with $139 million in cash, they could easily pay off the debt that they're going to be acquiring from Stronghold's balance sheet. Okay, but right, they can easily pay it off. But as we know, the market is expecting rate cuts coming in September from the Fed, right? That is what they're expecting. Interest rates to be cut. So they can easily also refinance those debts, okay? And get a lower interest rate on them, right? So they have those options, right? They can either pay off that debt with the $139 million in cash that they have right now, or they can refinance that debt for a lower interest rate when the Fed cuts interest rates, right? Coming up in September. That's what everybody is expecting to happen. Okay. But let's take a look now at the terms of this agreement. Okay. Over here, we can see under the terms of the merger agreement, Stronghold shareholders will receive 2.52 shares of Bitfarms for each share of Stronghold they own, representing consideration per share of US $6.02. Keep that number in mind, $6.02, and a 71% premium to the Stronghold 90-day volume weighted average price on NASDAQ as of August 16, 2024. At close, Stronghold shareholders are expected to own just under 10% of the combined company based on the current issued and outstanding shares of each company. Okay, so this number right here is important, $6.02, okay, because we're going to discuss now what these terms of agreement mean for each of the investors, for Stronghold investors as well as Bitfarms investors, okay? Let's take a look at what happened for Stronghold shares when this news was announced. Now, this was great news for this company because, as we know, they were in trouble, okay? They were looking to get bought out, okay? So as we see here, they are currently trading at $5.45, okay? Last week, before the news was announced, they were trading at around $2.90, okay? So obviously that was great news. They were getting bought out by a bigger company, and so now their share price went up to $5.45. If you are a Stronghold investor, ladies and gentlemen, and you've been buying shares of Stronghold because it is great news that came out last week, right? So if you've been buying up shares of Stronghold, well, that's fine. You could continue to buy shares of Stronghold, right? But remember, you're only going to receive $6.02 worth of Bitfarms shares when the deal is closed, which is expected to close, right? Everything is supposed to be final by the first quarter of next year. So if you pay more than $6.02 for your Stronghold shares that you're currently buying right now, it's not going to be worth it. Okay, because if you pay more than $6.02, then you're paying more than what you're going to receive when this deal is final. Okay, you're only going to receive $6.02 worth of Bitfarm shares. So I would not suggest that you pay more than that for shares of Stronghold. Okay. Now, what does that mean for Bitfarms investors? What does this news mean for Bitfarms investors? Okay. So remember, Stronghold investors are only going to receive $6.02 worth of Bitfarms shares. Okay. So Bitfarms is currently trading at $2.43. So that is why Stronghold investors are expected to receive 2.52 shares of Bitfarms. However, if when this deal closes, which is supposed to happen next year, Bitfarms is trading at $4, then they're only going to receive 1.5 shares of Bitfarms. Okay, Stronghold investors will only receive 1.5 shares of Bitfarms stock if they are trading at $4 a share when this deal is final. But if Bitfarms is trading at $6.02 per share when the deal is final, then Stronghold investors are only going to receive one share of Bitfarms. Okay. Now, if Bitfarms is trading above $6.02, they're trading at $7, $8, all right, even $10, then Stronghold investors are not going to receive one share of Bitfarms. They're going to receive less than one share of Bitfarms because they're only going to receive $6.02 worth of Bitfarms shares. Okay, so that is what this news means for both Stronghold investors and Bitfarms shareholders. Okay, I hope this all makes sense to you. Let me know in the comments below if you have any questions on that or if you have any further insight on the terms of these agreements. Okay, now let's take a look at the press release. We're going to listen to the webcast because I want you to listen from the horse's mouth itself what these two companies agreed to and why they wanted to make this merger, right, of these two companies. Now, as we know, Riot has been trying to buy Bitfarms because they want to become the biggest mining company out there, okay? But they made a pathetic offer on Bitfarms. They only offered to buy Bitfarms for $2.30 a share. So obviously that offer was rejected. Riot, as a result, is not going to be able to become the biggest mining company that they were hoping to become by acquiring Bitfarms. Bitfarms, because they were able to close this deal to buy out Stronghold, okay, they are going to become a bigger mining company, okay, which is what Riot was trying to accomplish, right, with their hostile takeover of Bitfarms. They lost on that, right? There is currently no offer from Riot to buy out Bitfarms, okay? They do not have an offer on the table right now. But let's take a look at why Bitfarms and Stronghold made this agreement to get to for Bitfarms to acquire Stronghold's Stronghold Digital Mining Company. Okay, let's take a listen to this webcast right here.
Thank you, Tracy, and good morning, everyone. I'm very pleased to be here today discussing this transformative combination with Stronghold. We've known Greg and his team since 2021, and today's announcement is the culmination of 3 years of ongoing discussions. I'm incredibly proud to announce this acquisition, which builds upon the successful momentum of our transformative fleet upgrade and ensures a multi-year strategic growth path for the company that both companies are incredibly excited about. Turning to slide 5. As I've said since my appointment as CEO, I'm committed to diversifying the company beyond Bitcoin mining in order to make us better Bitcoin miners and create long-term value for shareholders. I would like to start this call with a summary of how we are executing on that strategy with this transaction. First, we are vertically integrating into energy generation with the acquisition of 2 strategically located U.S. power plants. Second, we are dramatically expanding and rebalancing our energy portfolio towards the U.S. with potentially over 300 megawatts of cost-effective power capacity. This could increase our energy portfolio to 950 megawatts by year-end 2025, with significant expansion potential in 2026 and beyond. Third, the 2 sites boast significant energy trading, demand response, and other opportunities to give us significantly greater control over our most important cost variable, our price of energy. Fourth, the sites have tremendous flexibility and a unique potential to scale our Bitcoin mining operations and cost-effectively integrate HPC and AI into our portfolio. Fifth, we are extending our long-standing environmental leadership with the acquisition and integration of equipment and processes that go beyond just using sustainable energy and proactively detoxify and clean up centuries-old pollution, cleaning the earth, the water, and the air. 6, this all-stock transaction is highly accretive and preserves our balance sheet for future growth. Turning to slide 6, I would like to turn the call over to Greg Beard to give a quick overview of the Stronghold assets and their potential. Greg, the call is yours.
Thanks, Ben. I'm grateful to be here alongside the Bitfarms team, whom we have gotten to know very well. After 3 years of merger discussions, it was about time we found a way to make it work, and we're very excited to be joining forces. Scale and balance sheet strength are critical differentiators in most industries, including our own. When these characteristics are combined with low cost of power and a culture built on technological and operational expertise, we believe it is a winning recipe, and this represents what Bitfarms offers. There is not a stock I would rather take. I believe that Stronghold is getting good, fair value for our assets, and I am highly confident that with Bitfarms' financial fortitude, demonstrated ability to execute, and vision, they will be able to expand Stronghold sites and unlock their value in a way that we would not have been able to do in the near term as a standalone company. And for me personally, as a Stronghold shareholder, the accretion, growth profile, and balance sheet of the combined company are highly compelling and differentiated from industry peers. Turning to slide 7, I want to provide a quick overview of the Stronghold assets and their potential. Our complementary, vertically integrated operations include Bitcoin mining, power generation, and environmental reclamation across 2 sites in Pennsylvania. Stronghold owns 2 merchant power generation and reclamation facilities, Scrubgrass and Panther Creek, which are pictured on the slide, and over 750 acres of land with another 1,100 acres under option. Scrubgrass and Panther Creek are waste-to-energy facilities that boast nameplate net power output capacities of 85 and 80 megawatts respectively. They were among about a dozen reclamation facilities purpose-built in Pennsylvania to deal with mining wastes that dates as far back as the 1800s. For over 200 years, this toxic waste has been damaging the earth, poisoning the water supply, and often spontaneously combusting and burning uncontrolled. The waste emits CO2, NOx, SOx, and other harmful toxins, and our plants process the waste in a controlled manner, significantly reducing emissions, cleaning the land, and mitigating acid mine drainage while producing both cost-effective electricity and beneficial use ash, which can be used in environmental remediation, as agriculture fertilizer, and to capture CO2. In addition to producing electricity, our sites have the ability to draw power from the grid at attractive prices. This is expected to effectively double the potential electricity available at these locations to over 300 megawatts in the short term. Furthermore, Stronghold has numerous studies in process at different stages with local utilities to potentially nearly triple the total capacity available at the 2 sites to over 950 megawatts over the next few years. This expands Bitfarms' robust portfolio of power assets with strategic access to existing power and provides significant potential for further expansion and development. Turning to slide 8, I will return the call to Ben.
Thanks, Greg, for your great overview of the strength and potential of the Stronghold assets. Turning to slide 9, I would like to discuss how this expands and rebalances our portfolio of energy assets. Upon closing, the expected 307 megawatts available at these 2 locations would drive a 47% increase in our 2025 year-end megawatts from 648 megawatts to 955 megawatts. Building off the success of our recently announced Sharon, Pennsylvania announcement, the combination of these 3 sites creates a PJM portfolio of approximately 427 megawatts in 2025, which is nearly the same size as our energy portfolio at the end of 2024. Importantly, these sites rebalance our portfolio back to the U.S. and North America, representing 47% and 65% of our 2025 year-end portfolio, respectively, while our LATAM exposure will scale down to just 35%, significantly improving the size, quality, and distribution of our energy portfolio. Turning to slide 10, we can see here how our energy portfolio can grow over the next few years. With the additional potential expansion capacity of the Stronghold assets beyond 307 megawatts, we now expect to expand beyond 950 megawatts to up to 1.6 gigawatts of power, of which 66% would be located in the U.S. and in the highly desired PJM region. This creates the potential to grow our energy portfolio an additional 62% beyond 2025. Turning to slide 11. I would like to reiterate why we believe PJM and Pennsylvania specifically are top-tier jurisdictions for Bitcoin mining. First, the PJM grid is the largest wholesale electricity market in the U.S. As a deregulated market, PJM offers significant curtailment and energy trading opportunities, giving us the ability to effectively hedge our energy costs and bring down the total cost of power, ideal for mining Bitcoin. These sites also have the ability to participate in demand response programs in order to earn additional revenue by providing reliability services to the grid. As the grid is rapidly adding renewable capacity and significantly contributing to the decarbonization of the grid, these demand response programs are becoming increasingly more valuable and make these sites both economically and environmentally sustainable. Pennsylvania is a great business jurisdiction with a notably pro-Bitcoin and pro-energy governor that just a few months ago recognized the importance of these remediation plans by doubling the tax credits available through 2035. Finally, the proximity of these sites to major metropolitan areas and fiber lines make them ideal for both Bitcoin mining and HPC and AI data centers. Turning to slide 12. There exists a tremendous potential for improvement and expansion of the Bitcoin mining operations at these two locations that can increase the total hash rate capacity by up to 5-fold in 2025, which would effectively double our 2024 year-end target of 21 exahash. This potential upgrade, in addition to the changes in our energy portfolio, is what we have underwritten this acquisition on. The potential upgrade can be broken down in two phases. First, the megawatts available at both sites can be doubled by simply isolating the power plants from the grid, otherwise known as islanding, to provide power to a Bitcoin data center. Doing so frees up the substation, enables these sites to double down, drawing additional power from the grid in a similar capacity as the sites can generate. This grid-connected load can then participate in demand response and other economic programs. Doing so, we can dramatically increase scale by nearly 100%, bring down our expected average price of power through energy trading and other economic programs, and spread our fixed operating expenses over a significantly greater amount of megawatts, further bringing down our all-in cost per megawatt hour on site. Second, while the miners on site are still productive, at 32 watts per terahash, the fleet is significantly below the efficiency and productivity of the industry and new miner models. Refreshing this fleet with new Bitmain S21 XPs would increase the total hash rate of the current footprint to over 10 exahash. Additionally, if the full 307 megawatts were allocated to new S21 Pros or S21 XPs, the total exahash on site could increase over 5-fold in 2025 to over 20 exahash, more or less equivalent to our year-end target of 21 exahash. Improving the energy efficiency of this largely outdated fleet would also dramatically reduce site hash cost by over 50%, from over 3 cents today to an estimated 1.3 to 1.4 cents per terahash per day. This is well below where the market is currently operating at, and well below the levels of hash price the market currently responds to, as well as where we expect hash price to go during the widely anticipated Bitcoin bull market. Turning to slide 13. These sites have a unique potential to disrupt the HPC business model with a combined AI and Bitcoin mining data center. It is important to emphasize here at the outset that this is highly innovative and disruptive. As far as we can tell, no one has ever contemplated this kind of strategy and data center configuration. It is actually so novel that there is nothing in the PJM and FERC regulations that can be applied towards this structure. In order for this to be successfully implemented, we will need to get approval from both PJM and FERC. Accordingly, this potential was not underwritten as part of the transaction. However, the potential is so great that we think it's important to outline the vision here and state that we will be seeking the necessary approvals, but these approvals will take time, and it is possible that they may never materialize. A traditional data center utilizes a grid connection and diesel generators to provide a redundant source of power. With this strategy, we would be flipping this model on its head and instead utilize the cost-effective and reliable power from the Tier 2 alternative energy plants for its primary and baseload connection. We would then utilize the grid connection to provide redundancy for the HPC and AI data center. This configuration has numerous potential benefits. First, diesel redundancy has a very high OpEx And other than providing the reliability for the data center required, it has no value or function. By utilizing the grid connection and Bitcoin miners as a load bank, we would be able to monetize this redundancy when the cost of energy is low and significantly enhance site profitability, and in the process, provide a more sustainable and environmentally friendly redundancy over traditional diesel or battery storage. Even more importantly, we could avoid entirely the capex associated with building out diesel or battery redundancy, which can easily add up to $3 million a megawatt. Assuming one 80 megawatt HPC, AI, and Bitcoin data center, that would translate to capex savings of up to $240 million, significantly more than the entire cost of the transaction. And we could do this twice, once at each location, potentially saving up to $480 million of capex on 160 megawatts of HPC infrastructure, nearly 3 times the value of this transaction. If we are successful in securing the necessary regulatory approvals, this could potentially result in a significant competitive advantage over traditional data centers by materially reducing capex, increasing revenues, and improving our return on invested capital. Turning to slide 14. For years, Bitfarms has led the industry in environmentally responsible Bitcoin mining operations. Since our founding in 2017, approximately 96% of all our Bitcoins mined have been mined with sustainable energy, producing over 25,000 Bitcoins with minimal environmental impact. But as we look towards the future, we believe it is not enough to utilize clean energy. We need to be proactive in solving problems and not only minimizing our impact, but going above and beyond to drive positive change. Turning to slide 15. In addition to the tremendous economic value of this transaction, as part of this transaction, we are acquiring technologies, infrastructure, and a team to drive the positive change and extend our environmental leadership beyond just minimizing our impact to making the world better. Starting in the Industrial Revolution in the 1800s, industrial waste began being dumped into large piles all across the state. Over time, they effectively became toxic mountains. There are literally hundreds of these abandoned waste piles across the state of Pennsylvania that make the land unusable. As these waste piles sit untreated, they leak toxic chemicals into the water supply, first contaminating smaller streams that feed into the Allegheny River, and then into the Ohio River, which feeds into the Missouri River, and eventually ends up in the Gulf of Mexico, polluting a significant amount of the U.S. water supply and negatively impacting tens or hundreds of millions of people. Additionally, these piles will inevitably combust, whether that happens from a lightning strike, dry weather, or some other factors. And when they do, they burn uncontrollably, emitting a massive amount of pollutants into the atmosphere. There are currently over 40 of these piles actively burning throughout the state today. The remediation plants we are acquiring utilize specialized technology that remediates toxic waste into 2 valuable commodities: electricity and beneficial use ash, which is both a valuable fertilizer and carbon capture agent. This equipment and remediation effort is so important to Pennsylvania that it's classified as a Tier 2 alternative energy source in the state, and is in the same category as large-scale hydropower. This is a well-recognized environmental issue, and these remediation plants enjoy what may seem rare these days: bipartisan support, due to their proven environmental benefits over multiple decades. The tax credits available to those that remediate these legacy waste sites are proof of this positive impact these plants are having on the local communities and stakeholders. On the screen are photos that highlight this centuries-old environmental problem and the positive externalities that these plants have driven over many years as they clean the earth, the water, and the atmosphere. We look forward to continuing to drive these environmental benefits in a way that creates value for shareholders and the local communities. I'll now move to slide 16 and turn the call over to Jeff to discuss the financials. Jeff?
Thank you, Ben. This is indeed an exciting day for us. Turning to slide 17, I'll now provide a brief overview of the deal economics. Bitfarms is acquiring 100% of Stronghold in an all-stock transaction for a total equity value of $125 million plus an assumption of debt valued at about $50 million. As Ben discussed, Stronghold is bringing significant value to the table, immediately adding 4 exahash and 165 megawatts to our operating capacity upon closing. We believe that this exahash number will grow significantly as we initiate a similar fleet upgrade program to the one that we have been successfully conducting across all of our sites in 2024. In addition, Stronghold currently has capacity to import 142 megawatts of PJM power and has identified a path to potentially import as much as 790 megawatts of PJM power, which will bring our total megawatts under management to over 1.6 gigawatts. On the operational side, we anticipate annual run rate cost synergies of approximately $10 million based on our current estimates. The Stronghold team complements Bitfarms' existing bench with operational expertise in power generation and a number of other activities that will be additive to our current capabilities. Lastly, we expect this transaction to close in the first quarter of 2025, subject to approval by Stronghold shareholders and other customary closing conditions. With that, I'll turn to slide 18 and hand the call back over to Ben to close.
Thanks, Jeff. Turning to slide 19. To summarize, this transaction is highly accretive, expanding our Bitcoin mining operations at an attractive value and securing robust expansion and growth opportunities for years to come. With this one transaction, we are able to, 1, significantly scale up our exposure to the highly coveted PJM region. 2, expand and rebalance our energy portfolio towards the U.S., delivering short-term value and significant long-term potential expansion. 3, leverage our operating expertise to perform a transformative data center upgrade. 4, pursue our vision of disrupting the HPC and AI industry with a combination HPC, AI, and Bitcoin data center. 5, acquire new technologies that drive positive environmental change. And we are able to do all of this at an attractive price with compelling transaction economics and an all-stock structure and potential synergies that preserve our balance sheet strength for future growth. I know I speak on behalf of the entire Bitfarms and Stronghold team when I say we are so incredibly excited about this transaction, which would not be possible if it wasn't for the tremendous teams at both Bitfarms and Stronghold that made this possible. And we are both looking forward to building the Bitfarms of the future. With that, we'd be happy to take your questions. Operator?
So this is the video for today, ladies and gentlemen. I hope you were able to enjoy that presentation from these 3 executives of both Bitfarms and Stronghold mining companies, Ben Gagnon, Jeff Lucas, and Greg Beard. You were able to hear them on that conference call. So I hope you enjoyed this video. Let me know in the comments below if you have any further questions on this. And as always,
This has been another video from Dad's Market Stats. Thanks for watching. Don't forget to subscribe, comment, and like the video. If you know someone that can benefit from these videos, make sure to share it with them as well. Until next time, and remember, let's grow together.